Today, we have a combination of a weaker dollar, lower oil prices, and falling interest rates. Three key financial variables that are all flashing green for risk assets. This backdrop means liquidity is flowing freely through the system, inflation pressures are easing, and money is getting cheaper to borrow. We saw a very similar setup in late 2024, which we highlighted to our members through the premium videos we release each week, breaking down our exact crypto strategy in real time. At Bravo's Research, we blend technical analysis with macro forces like these. So when all the signals turn green, we press our advantage and look for aggressive long setups. And when the backdrop shifts, we flip defensive to lock in and protect the gains we've made during favorable conditions. In today's environment, with all three macro variables aligned, investors are once again moving towards risk assets, which creates a strong tailwind for assets like Bitcoin and Ethereum. We can see this more clearly through this chart, showing how tight or loose financial conditions have been in the past 10 years, based on some of the macro factors we just discussed. Periods where conditions tightened, this line crossed above the red line, like in March 2016, March 2019, March 2020, and mid-2022. And conversely, periods where conditions were loose, this line fell below the green, like here in September 2016, July 2020, and January 2024. Now, if we look at what these instances correspond to on Ethereum's price, we can see that tight financial conditions coincided with significant pullbacks, whereas loose financial conditions lined up with strong Ethereum performance. And in 2016 and 2020, even new all-time highs. Today, conditions are once again easing, creating a backdrop that historically has supported strong uptrends in risk assets. That's why we're not too concerned about the profit taking from long-term Ethereum holders we highlighted at the beginning of this video. In fact, when we look a little bit closer, back in 2021, this same pattern didn't mark an immediate peak for Ethereum. The rally actually continued, with profit taking accelerating further as price climbed higher. That process lasted about 450 days in total before Ethereum finally topped out. Today, we're roughly 300 days into this current phase of profit taking, which, if the previous cycle is any guide, would put us somewhere around January of 2026 before a major top forms. Of course, the timing can always vary, but the key takeaway here is that this metric doesn't suggest an imminent peak in price. Instead, it points to Ethereum being in the later stages of its bull market, with potential for more upside, as long as the three key financial conditions we just discussed remain supportive. That's why we've just initiated a new trade on Ethereum after it broke out of its short-term downtrend, signaling that upside momentum is resuming. With today's constructive macro backdrop, we believe this setup has plenty of room to run.